Today, Binance strikes a mega deal to buy the non-U.S. division of FTX. Sam Bankman-Fried and Changpeng Zhao speak out on FTX's, quote, liquidity crunch. And Nick Carter of Castle Island Ventures explains what the surprise deal means for the industry. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies taking a dive this morning. By noon Eastern, Bitcoin dropped to $20,000, Ether slipped to $1,500, and Polygon's Matic token fell to $1.20. Okay, let's talk about the top stories, and we have to start with today's breaking news. Crypto exchange Binance reached an agreement to buy FTX's non-U.S. unit after mounting rumors that the company was dealing with insolvency. FTX CEO Sam Bankman-Fried took to Twitter late this morning to announce that his crypto exchange came to an agreement on a strategic transaction with Binance for FTX. Now, he assured customers that they are protected and wrote that FTX teams are working on clearing out the withdrawal backlog and noted that this is one of the main reasons FTX asked Binance to come in. SBF also addressed the, quote, rumors of conflict between the two exchanges, tweeting that Binance has shown time and again that they are committed to a more decentralized global economy while working to improve industry relations with regulators. He noted that FTX withdrawals in the U.S. are and have been live, are fully backed, and operating normally. CZ took to Twitter to confirm the deal, writing that FTX asked for help and noted that, quote, there is a significant liquidity crunch. The CEO wrote that Binance signed a non-binding letter of intent to fully acquire the non-U.S. unit of FTX and help cover the liquidity crunch. The two CEOs both said that a full due diligence process would be underway in the coming days. The deal comes one day after we told you about complaints from FTX customers over sluggish withdrawals. There's been a lot of market movement following the announcement from Zhao on Sunday that his firm would liquidate its holdings of FTT due to, quote, recent revelations. Now, CoinDesk reported that concern surfaced over the balance sheet of FTX's corporate sibling, Alameda Research, being too dependent on illiquid tokens, including FTX's own FTT. According to data from CoinGlass, investors withdrew Bitcoin in bulk from FTX over the last 24 hours amid concerns about the health of the crypto exchange. So I spoke to Nick Carter of Castle Island Ventures about the implications of this agreement for the crypto market. Take a listen. Okay, huge news this morning. Binance acquiring the non-U.S. unit of FTX. Just how significant is this deal, Nick?
Probably the most dramatic deal I've ever seen in the history of the crypto industry. Consolidates basically the two largest offshore exchanges into one entity. An absolute coup for CZ and Binance, and really a disaster for FTX.
So in this deal, CZ and SBF cited liquidity risks as the reason for stepping in. What do we know right now in terms of how much trouble the business was facing?
Well, we know very little, but certainly by virtue of the fact that Sam was willing to do this deal, it suggests that FTX was deeply impaired in terms of the run on the bank that began in the last 48 hours. We don't know exactly what the issue was, whether they were lending out or gambling with user deposits. Obviously, FTX has Alameda, which is a closely affiliated proprietary trading firm. We don't know if FTX was secretly insolvent, but the fact that they were willing to do this deal at what will likely end up being a fire sale price, if I had to guess, suggests that something was deeply, deeply wrong in the FTX Alameda apparatus, which is extremely concerning to find out after the fact. And I think we're all very keen to learn what the actual details of that situation were.
And there have been rumors surrounding what that relationship might look like, that leaked financials from Alameda Research that CoinDesk published showing that they had a very substantial holding in FTT, which is the token that's native to the FTX exchange. Can you speak to the context that was happening just before this deal went through?
Yeah, I mean, frankly, CZ and Binance precipitated the run. It was a masterstroke, really. They must have known something. They must have known that something wasn't quite right. Maybe they got access to some on-chain data showing that FTX didn't have the reserves that they were representing. Maybe they had discovered that Alameda was actually using user deposits on FTX to trade with. They would have had to know something because CZ kicked off this surgical campaign calling into question FTX's liquidity. Obviously, they caused partly through their words and tweets, FTT to sell off, which would have impaired Alameda's creditworthiness because we know they were using FTT as collateral. Something they did kick this off, and it really was a masterstroke by CZ because now he's consolidated into, effectively by far the largest single entity, at least outside the U.S.
Now, he did say in a tweet this morning that Binance reserves its right to do some due diligence. This doesn't completely commit them to the deal. What are the chances that they, get under the hood and decide to pull back from this agreement?
That's certainly possible. But the thing is, by virtue of the diligence, I'm sure it'll be an open book. I don't think FTX really has an option here. CZ and Binance will learn everything that they need to know. There'll be no trade secrets. Everything will be open kimono. And so regardless of the outcome, they'll be vastly empowered relative to FTX. And the other interesting thing to see is Sam has been testifying in front of Congress a fair amount. He said a lot of things. And if we learn through this process of discovery that any of those things were untrue, he could be in serious trouble here.
And also, what does this mean for all the companies that SBF was funding?
Their venture portfolio, Alameda, I expect Alameda survives this now with the deal, but have to imagine that some of those assets they were hawking to raise cash at the last moment here to deal with this liquidity crisis. The deals for BlockFi, Celsius, and Voyager certainly called into question. FTX will now be part of the Binance apparatus. It will be an offshore entity with FTX US being the residual onshore entity. I think those deals will likely not be consummated or be significantly impaired. And frankly, I think the trust has been lost. I mean, a fall from grace this rapid, a liquidity crisis, which they were clearly not able to deal with, why would anyone trust them? I think the charm offensive is now dead. I think the bills they were pushing in Washington are dead. I think the red wave that we're clearly getting today will be dooming Sam. I think he bet on the wrong horse here. He was the second biggest donor to the Democrats. That's not going to play well after what happens today. So I think all of his plans and schemes in Washington have just turned to dust in a matter of days.
What does this mean for the broader market? I mean, SBF was sort of the savior of the crypto industry back in May, but now even his own business was not immune. What does this mean?
Well, I think we're going to see confidence yet again shaken in the centralized exchange model, like we saw in the wake of Gox, like we saw in the wake of Quadriga. This is yet another example that these exchanges are simply not to be trusted for the most part, unless they're compliant, regulated onshore, unless they're doing proof of reserves. Right now, there's only two major exchanges that have done a proof of reserve, BitMEX and Kraken. It's cryptographically trivial. Depositors will now demand it. I think Congress will demand it. There will be a suite of shovel-ready legislation ready to go once the Republicans retake Congress here. I think that'll probably have to feature in it, a demand that centralized exchanges are more accountable, more transparent with their funds, and that they're fully reserved. It's clear that something was iffy, something was awry with FTX. And I think that is really going to hurt broader confidence. I think we're going to see a ton of concentration here. We have this massive mega exchange in the form of FTX and Binance. That raises questions about proof of stake networks, where all these funds are going to be custodied with the exchanges. There's going to be one super node controlling validation power. That is also going to call into question the decentralization of these networks that rely on the proof of stake model.
Okay, we have a couple more stories to tell you about. JP Morgan released research pointing to lessons learned from this year's crypto crash, arguing that it highlights risks from regulatory shortcomings. The financial services firm noted in the research released last Thursday that despite the crash, the technology behind stablecoins will continue to play an important role in the evolution of the monetary system. The bank highlighted 3 technologies needed to transform the future of financial systems: tokenization of securities and assets, smart contracts, and cryptography. Last month, JP Morgan conducted an investor survey that found that nearly 30% of those polled indicated that crypto would be the worst performing asset class next year. The vast majority of respondents, around 74%, expect Bitcoin prices to be below $25,000 in 6 months from now. Last up, a new study reveals which states in the U.S. are the most prepared for crypto adoption. Research firm Invez analyzed things like the number of crypto ATMs in each state, their accessibility, and the number of blockchain companies to determine which states are the most ready to handle widespread adoption this year. No surprise here, Florida got the top spot thanks to crypto hotspot Miami, followed by Texas and then Illinois. The 5 least crypto-friendly states include Vermont at the top, which the study noted is the only state without any Bitcoin ATMs. West Virginia came in at number 2, followed by Montana, Maine, and Hawaii. The survey noted that New York has the most comprehensive cryptocurrency laws, with nearly 20 related bills passed. Okay, before we go, we got to remind you that today is Election Day in the U.S. Head over to NBCnews.com/planyourvote to see which candidates are on the ballot where you live and how to vote before polls close this evening. That's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.